Hello and welcome to Business Incorporated live on Channels Television. I'm Ladi Williams. A brand new trading week right here in Lagos, Nigeria. Sorry for the delay, but we're back now. I will give you all that is expected in the markets today. Starting with global oil markets now, we're seeing U.S. crude oil futures, big drop, 2.49%, $55.80 per barrel. That's for Brent WTI, that's U.S. version there. That's more expensive than Brent there, $58.90, down 2.39%. We're seeing big drops there in the oil market, more than 20% drop so far this year. That's for oil prices. The 8 producers in the group led by Saudi Arabia, that's OPEC Plus, agreed to on Saturday to increase output by another 411,000 barrels per day in June. The decision comes a month after OPEC Plus surprised the market by agreeing to surge production in May by the same amount, and that's why we're seeing these prices. Let's get a check on the metals market now. Gold prices that rose more than 1% today, helped by a weaker dollar, with investors looking forward to more details on the U.S.-China trade negotiations. 0.7% jump there for spot gold, $3,261. We're seeing gold comfortably sitting in that $3,000 level, moving higher. U.S. gold futures, $3,269 per ounce. Spot silver is also shining, 0.1% up, $31.99, about $32. But on the flip side, we see platinum and palladium down, both below $1,000 per ounce. All right, to other matters now. The Science and Trade Conference, a platform to explore the principles that drive productive and progressive businesses. The organizers say the initiative is to empower African entrepreneurs to navigate the complexities of local and international trade and unlock opportunities for growth and success. Also partners with countries around the world to facilitate trade in Africa. The experienced entrepreneurs, especially those who have been successful in the clothing sector, have a lot of tips for the participants. Take a listen.
You have to really understand that. Are you going into this and are you able to scale? Do you want to scale? These were the challenges, some of the challenges that I faced at the time. Finding technical expertise. I realized I needed to train people because people come out of Yaba College of Tech and they say, I want to do my own thing. Sure, go do your own thing. Or people tell you, I want to work 2 days, or I want to do my own thing. Go do your own thing. How many people who started when I started were doing their own time are still doing business today? How many are they? How sustainable is it?
For me, there's a basic principle of production. So let's start with that, which is economics of scale. The more you produce, the cheaper it is. So if you're not producing in volume, you almost can't be cheap. So you can't compare a factory or, okay, don't even use word factory, or a workshop, a fashion workshop that is producing 100 garments in a month to a factory that is producing 1,000 pieces. Their costs are different. We all read, well, Zara is producing 150, 200 million items in a year. 200 million items in a year. And you're saying, oh, your prices can't be the same. There's no how. You can never. So first thing first, economics of scale. The more you produce, the cheaper it is.
All right, now to our first conversation there. We've got some data out for 2024 recently, and that's for the Central Bank of Nigeria. Reported strong earnings. Profit after tax was about 38.8 billion naira. Total operating income that rose from 5.9 trillion to about 15.1 trillion in 2024. Net interest income, but that dipped 94% in 2024, and other metrics there. But what does this mean for the Nigerian economy, especially the Naira? Joining us to unpack this, we have Basil Abia as the co-founder of Verif Africa, joining me from our Abuja studio. Great to have you, Basil.
Hi, Ladi.
Yeah,
Good afternoon from Abuja.
Yeah, it's great to have you right there in our Abuja studio. It's been a while, Basil, but I know it's my fault. I've been away too, on vacation. But first off, Let's start with the Naira, at this point. We're in a brand new month. How do you see the performance in April? We did start the month of April, stronger, but we saw weakness going down.
Yeah, so obviously April was marked by a lot of exogenous shocks on the Naira. A lot of people have to understand this. There's barely a lot that the CBN or the Federal Ministry of Finance can actually do, including the NMPCL, to strengthen the Naira when there are certain exogenous shocks that come into play. There's an interplay of the trade tariff deals carried out by Washington, D.C., led by President Donald Trump, with the combination, of course, of the reduction of the Brent crude prices at some point in between the beginning of April and then the end of April as well, marked by a number of factors like increase in crude supply as well as confusion over the trade deals. Now, with that combination, we also had a slight reduction in external reserves because of some internal deepings by the CBN to carry out a number of FX obligations. That contributed in the Naira slightly deepening over during the middle of April. But we're seeing a strengthening in that, and I'm looking at May as something similar. We're not going to have a further reduction in the cost of the dollar against the Naira, but we're also going to, very important to highlight that there would be a lot of parallel market activity. And that context is because the budget year for 2024 is coming to a close, and the budget year for 2025 will pick up just around that time. And I mean, if you're in Abuja, you understand some of that interplay. Obviously, that is not calculated by quantitative data, but we all know there are parallel market pressures at some point in Abuja during certain budget year closures and budget year openings. There's always that pressure, and that pressure obviously leads to an increase in the cost of foreign exchange.
Right, so yeah, definitely another hot one on the burner is the CBN reporting 2024 earnings. First off, I'd like to get your reaction, when you saw the CBN actually reporting.
I was happy. It was like heaven. How many years have we waited for a financial year report? How many years have we watched the contravention of the CBN Act where the CBN doesn't make financial reports public? The same thing with the NMPCL and many other Nigerian quasi-MDAs or quasi-corporations, in that sense, quasi-government or quasi-private corporations. So I'm very happy. It's a step in the right direction. Should have taken as early as 2024, but it dropped, and then we're really happy. I have concerns. I have certain questions. But thus far, I'm really happy with the numbers that we have read from the FY 2024 report.
See profit after tax 38.8 billion, and that's coming from a loss, in the previous year. We also see net interest income that dipped about 94% in 2024. Help us break down these numbers and what they mean for the work the CBN has to do in 2025.
For instance, the net interest income, we all know what has led to that. There's been a lot of monetary policy activity from the CBN. For instance, the mopping up of liquidity due to the OMO issuances, that has obviously increased that position. So that NI increase is noted as very commonsensical because of the activity of the CBN. Now, for the other positive reportage that we've seen from the numbers, it's very important to highlight that that has been largely due to the accretion into the external reserves. As you know, the external reserves have increased from 36 billion to over 38 billion, at some point nearing 40 billion before a slight dip last month. And that is because receipts by the federal government from crude oil exports, as well as a market increase in foreign portfolio investments, as well as foreign foreign remittances as well, domestic remittances from our Nigerians in the diaspora have led to that accretion. So that increase in external reserves helped out with a lot of the FX obligations. They were, of course, marked by a number of devaluation losses. Those losses wiped out most of the gains. But I see progress in that sense because there is now organizational control. There is some form of transparency. There's adoption of new internal reporting protocols when it comes to the accounting perspective. And there's some confidence from the board. They had a very good outing. They had a very good outing at the IMF events last month as well. So we give them kudos for that. I know that some analysts are not happy that the CBN are now the chief marketers for external liquidity in that context. And I understand the fears. You expect the Federal Ministry of Finance to lead that charge. But this continue to strengthen monetary policy governance is continue to boost the strength of the Naira. But we have liquidity management expenses that are going to continue to increase because of this policy. And that means we're going to see more OMO issuances in that regard for the latter end of this year. So, yeah, there are a mix of problems that are still hanging out. Some analysts that I've spoken with and some analysts who have posted on social media are concerned that there's still not a lot of transparency with our foreign exchange liabilities in terms of the forwards and the swaps. There's need for more transparency in that regard. What is our actual standing? As you know, during the unfortunate days of Godwin Emefiele as the CBN governor, we had some international media coverage that was really damning to the state of the CBN bottom line. And that includes all of the liabilities owed to banks like JP Morgan et al. But thus far, very strong confidence from the reports.
And, talking about the report now, at first glance, definitely it does look good. But does it inspire confidence, for you, for the CBN's ability to actually defend the Naira going forward?
That's a very tricky question. Do I have confidence in the CBN to do what is needed? Yes, I have confidence in them doing what is needed. They have very limited tools, actually, in not only defending the Naira, but also fighting inflation. Like I've always noted, wherever I go to in public, inflation is almost out of the control of CBN because most of our inflation is cost push. And because of that cost push dynamic, you want the Federal Ministry of Finance to play that particular role. CBN will do what they have to do, which is continue to strengthen the monetary policy stance. I know that some analysts are proposing a more tiered form of the credit requirements, the cash credit requirements. In that sense, ensuring that they lighten the load on some banks who have very good loan balances in that sense. So these are folks that have very good loan to deposit ratios, and their non-performing loans are better than most peers. And then with that regards, their CRR is reduced or streamlined compared to those who are not doing too well. So that an incentive system so that banks can increase liquidity to the real sector. So that's probably just one recommendation that most analysts will push. But there's nothing much that the CBN can do in terms of controlling inflation. And it's the same thing with the Naira right now. Exogenous shocks will continue to push back on all of the gains of the CBN HQ. Let me give you a very important fact now. And there's a potential that the Brent crude can reduce further again from the $60 per barrel range to even lower than $50 per barrel. There are lots of exogenous shocks in that sense, the geopolitical pressures, some of the conflict happening in the Middle East, conflict again rising from China, Taiwan, Russia again as well. So when you combine that with the tariff madness from Washington, D.C., all of that ambiguity, lack of clarity forces these exogenous shocks on liquidity inflow. And of course, liquidity inflow is directly proportional to the strength of the Naira. So there's very little that the CBN can do, but are they doing well enough? I'll give them that. Right. They're doing well enough. But to answer your question, it's out of their powers.
Yeah, definitely. Most central bankers under a lot of pressure right now. But, before I let you go, I know recently you concluded a report on, food prices in Nigeria. Run me through what you found out in that report.
Yeah, it's a primary report. It's a very important baseline because we're working on a dashboard that Nigerians can come and see food production data real time and food price data across board real time. And that baseline has proven to us a number of assumptions right and a number of assumptions wrong. Now, the assumption that is right is that farmers are finding it difficult to engage in agricultural activity because of the increase in insecurity. They're also finding it difficult to access finance. And I keep asking, the CBN pumped at least 1.2 trillion Naira over the last 10 years in their Anchor Borrowers scheme. Most of it didn't go to the farmers. And in fact, a vast majority of our respondents, rural farmers in rural areas in Nigeria, smallholder farmers of not more than 2 hectares, told us, according to the quantitative data that we collected, told us that they just have no access at all to finance from either a government source or a financial institution. So that's the problem. There's a financial distribution disequilibrium in that sense, where it's not actually getting to the actual farmers, and that's affecting productivity. Now, the assumptions that we got wrong before we went to the field, and then the field obviously gave us the numbers, was that there is considerable slash or reduction in food prices for a number of reasons. There's more influx of food from our external borders, and then, of course, secondly as well, it seems that the rate and spate of food inflation has started to reduce. That's what the numbers are telling us. And don't forget, we were not looking at market prices. We were collecting farm gate prices, so how the farmers are pricing food vis-a-vis the pressure from the market prices. And it just was obvious that because of the fall or clash or a reduction in market gate prices, farm gate prices had to reduce so that they can compete in terms of those sales. So those external inflow of food, either smuggled or legitimately acquired through our borders, are coming in the numbers and reducing these prices. There's also a seasonality factor, as you know. Only 3% of agricultural activity is due to irrigation. So basically, most of the value chain, the crop value chain production, is carried out only one season alone. So we're a very one-season agricultural environment in terms of production. So the seasonality now for most of the food crops that we covered in our food price survey has shown that the prices are deepening. This doesn't mean that will continue. It obviously means that that's the season for these food crops. At some point, these prices will increase because it will no longer be the season in terms of production. And don't forget, we have storage facility issues. In fact, we covered tomato, and tomato has an average post-harvest loss of about 50% because, again, it is a perishable. We do not do distribution for perishables very well because we don't have a lot of refrigerated trucks. And secondly, electricity using or consuming 5 gigawatts for our national grid is just not enough for an economy with over 216 million people. So those are the numbers, those are the dynamic. The rate of inflation in terms of food inflation is reducing. There's no doubt about that. That's what the data tells us. But would that continue to be the case moving forward? I don't think so. Seasonality is going to be a big factor.
Right, definitely. So much to unpack there, Basil. Thank you so much for putting together that report. I'm still going to drill deeper, into that report later. Thank you so much, Basil Abia, co-founder, Verif Africa. Thank you for coming on today.
Thank you, Ladi. Always a pleasure. Thank you.
All right, so we see as solar energy adoption expands in Nigeria. The Chief Executive Officer of Energy, Femi Adeyemo, was concerned about the quality of equipment imported into the country. Mr. Adeyemo, who was a guest on Business Morning, believes that Nigerians and the Standards Organization of Nigeria need to stay alert so the country does not become a dumping ground. That's a real risk. Do take a listen.
We're lucky where we're located, at longitude and latitude. We're very lucky, and we should be maximizing that. And if we then look at the cost today, solar panel cost, but most especially lithium battery costs. I can tell you that in the last 18 months, battery kilowatt hour pricing had halved at the moment. What does that mean? It means that now Nigerians can get reliable and now affordable solar plus lithium battery. because there is also conversations around sustainability. We also don't want Nigerians to just go and install solar, because solar is not solar. And we've seen that a lot in recent time in Nigeria, where Nigeria now is gradually becoming a dumping ground. And that's not what we want, because eventually that will not be sustainable. So as we're preaching residential SMEs to go solar, because indeed the sun can save us, we should ensure that as Nigerians are looking to that, to get solar, they should ensure and ask questions, what type of solar are they getting? If they're getting a 10 kVA or a 10 kilowatt solution, are they really getting 10 kVA? Or is this 6 kilowatts coming from somewhere in Asia and they label it as 10 kilowatts? We've seen a lot of that coming.
All right, we'll take a break now. When we come back, John McCall give us details on what's playing out to the markets. That's in a moment. Just stay with us. All right, on the flip side, now we have John McCall to give us details on what's playing out in most of the markets that we track. Yeah, Ini.
Daddy, you're too excited.
Yeah, I know.
I know you have fresh energy.
I've been resting so much.
Okay.
And
your adrenaline is very high.
Yeah.
Okay, and you missed this.
Yeah.
Okay, I'll remind you in 2 weeks.
Yeah.
We'll see your level of energy and excitement then.
Hopefully
okay.
Stays on.
Good afternoon, everyone. This is the market segment of Business Incorporated, and looking at the market, we see that the NGX has sustained the positive sentiment from last week. Last week, we had a lot of green recorded, so almost 0.5% up, and now we are sustaining the 106,000 level as intraday. For Johannesburg, they are also on the climb. They hit this 92,000 late last week, and they are still on that roll, 0.07%. For Egypt, it's a negative close. And, you know, I think on Friday or so, the market was not open, but they opened with profit taking. So we see Egypt is down 0.31%. Nairobi's close from Friday, as we always give you the day before, or the last trading day, is also in the red at 0.38%. We leave Africa now, we go to the Middle East, and we see mixed there for the Middle East. Dubai opens right there in the positive 0.17%, 9,561.21. The flip is what we have for Abu Dhabi. Abu Dhabi intraday is almost 1% in the red, 5,335.68. For Saudi Arabia, it's positive 0.13%, and Qatar is almost 0.5% in the red. So it's a flip one there. We know that investors' nerves are a bit calm now, since President Trump has talked a lot about the possibility of compromise on his tariffs with China. We've seen a bit of calm there since Friday, so that's also rubbing off in the markets. Talking about President Trump, we go to the United States. Stock futures dropped as Wall Street come off a winning week, with S&P 500 logging its longest positive streak in 2 decades. And so we see, we had a lot of results from the Wall Street last week, and we saw positive sentiments coming out of that. But 4 features this morning, it's a negative trade, and we see profit taking seems to have set in, and I think they've lost that 42,000 level right here. S&P futures is also red. NASDAQ is red, very red, more than 1% down. And the broad market index advanced nearly 1.5% on Friday. It's the 9th straight day of gains, its longest winning run since November. No wonder investors have decided, you know, to take a bit of such profit, of the profit that has been accumulating over the most of last week. Increasing hopes for a U.S. trade deal with major trading partners. Top on the list, China. That has buoyed sentiment and stocks in recent days. Chinese authorities have said that they are also evaluating the possibility of starting trade negotiations with the U.S. According to Wall Street, they're also suggesting that Beijing is open to trade talks and but there'll be no trade deals between U.S. and other countries that have not been announced. And from there, we go to Asia. Asia, we see it's mostly positive at intraday. The benchmark Nifty, for instance, is positive. But let's start from China. See China more than 1% in the green at 36,800 30.69. Kospi of South Korea is also green. Hang Seng is green, 1.74. That's a whole lot of green. And looking at other markets, Shanghai is the only negative from that region at this time. Now, India is of interest this afternoon because in India, the benchmark Nifty 50 added 0.47%. We know this market has been struggling. There was a huge outflow of foreign funds, and there the market really depending a whole lot on foreign funds, and so we saw a drop. So this recovery, of course, is a breath of fresh air. But representative for the Indian billionaire Gautam Adani and his companies reportedly met with officials from U.S. President Donald Trump's administration to discuss the dismissal of criminal charges levied against him in an overseas bribery probe. And the talks, which began early this year, have picked up speed in recent weeks and could lead to a resolution in the coming month or so if the pace continues at this. Because of that, the shares of Adani Enterprises surged more than 7%, while Adani Green gained 6.68%. Adani Port also soared at 6.31%. Adani Power shares also rose almost 6%. The energy advanced 3.3%. So we now see what's driving the sentiment driving that. And we also know that it does look like the U.S. is looking the way of India, you know, as a shield from the many transactions, especially labor-related activities that they have been doing in China. So India seems to be, well, gaining directly from the fight between the two biggest economies in the world. And Mr. Adani now is also reaping off all of that to get some kind of compensation or reduced punishment or so between what has been going on. So beyond India, the veteran investor outlined Brazil, Vietnam, and Taiwan as promising markets in the region. So there you have it. That's why the Nifty is looking so good. So while its resistance level was only 22,000, we see it's gone up to more than 24,000 at this time, and maybe looking for a new resistance point, you know, for this to settle. So that's the market story that I have for you at this time, Ladi. India is shining at this time, something that we're hoping Africa could do in the midst of the battle between the two elephants, but India seems to be gaining from that now.
All right, thank you so much, Inida, giving us details of what's playing out in most of the markets that we track. But let me take it on to Germany now. We see Germany is the country with the second largest gold reserves in the world, but not all of the country's reserves are actually stored within its borders. Now, some experts are calling for the government to bring all the gold back home. Well, Lars Holters with DW joins me now. Great to have you, Lars. So how much gold are we talking about here, and where is it?
Yeah, good being with you, Ladi. Hi, and thanks for having me. Well, you know, the numbers here are really staggering. Germany actually holds 3,361 tons in gold reserves, and that's worth together over 300 billion euros. Now, only about half of that is actually stored in Frankfurt with the Bundesbank. That's approximately 1,700 tons. Then there's another 400 tons of gold with the Bank of England in London. And finally, there are just over 1,200 tons of gold with the Federal Reserve in New York. And that is where things have gotten dicey, because the Fed, you know, Ladi, as trustworthy and as independent as this venerable institution has been for hundreds of years, it's come under scrutiny recently, of course, ever since U.S. President Trump has tried to gain influence over its policies. We've seen it again just over the past 2 weeks when Trump threatened to fire Fed Chief Jerome Powell. Then, of course, he stepped away from that threat again. But it was enough to make some people doubt that the gold is really safe in the U.S. and with the Fed. Oh, and then, of course, there's that other anecdote where Donald Trump recently said that he and himself as well as Elon Musk, they would like to take a trip to Fort Knox to check if all the gold is really there. Now, you know, that might have been a joke, but it's a weird one. There is no reasonable doubt, of course, that the gold is not there. Germany's reserves, as I stated, of course, is not in Fort Knox. It's in New York. But joking like that, especially when you're the president of the United States, that just doesn't make anyone trust you more, especially since Trump's presidency, of course, so far has already led to people and nations losing trust in the U.S. as a whole.
That's interesting, Lars, but I'm guessing you are holding your personal gold in Germany and not in the U.S. But will Germany move its gold from New York to Frankfurt?
Well, it's highly unlikely, actually, that that's going to happen anytime soon. And there's a bunch of reasons, Ladi. First of all, the Bundesbank, that is the federal bank that officially is the owner and the holder of these reserves, they're saying that indeed they fully trust the Fed and don't see a reason to move the gold. Also, doing so wouldn't be easy. Over the past 20 years, Germany did move some of its gold around, taking, for example, all that used to be stored in Paris and brought that back to Frankfurt, but also from New York over the last couple of years or so. Occasionally, they took some gold out and brought it back, over 600 tons all in all, but it took several top secret shipments. Some of the gold had to be actually melted down and reworked into new bars. All of that cost millions of euros just in operative cost. But mostly one has to keep in mind also why so much of Germany's gold was even in or is even in the US in the first place. And that is because New York, much like London, is an important trading place for gold. And since gold is essentially insurance for a country and should be there to be sold in an emergency, it's obviously a good idea to keep it where it can be easily sold. And that is London and New York.
Well, I guess, that makes sense. Keep your gold where it can be, sold easily. But what are investors looking at in today's market?
Yeah, Ladi, investors are pretty happy once again today. We've seen the DAX up for a couple of days. I think this is 9th day in a row now. If it stays that way, we're way up over 23,000 points currently. So after all these drastic losses when Trump blew up global trade recently with his tariffs bomb, but especially after he walked back, a large part of these tariffs, markets have rallied once again. Actually, where we stand in Frankfurt right now is just a bit even under that record high we had just seen a few weeks ago. The oil price is down. That helps some stocks. And the big winners in today's trading session are defense stocks. Rheinmetall is the big German defense contractor. These shares, of course, are up and have been up for several reasons over the last couple of years, especially, of course, against the backdrop of the war in Ukraine. But even lately, they've gained even more as the Europeans are understanding that they have to invest more in defense to become a little less dependent on the United States.
All right, thank you so much, Lars. Always great, getting your perspective. I know you're keeping your gold, closer to you where you are.
Yes, thank you, Ladi. Pleasure.
All right, now let's get a check on all the stories now. See, the Nairobi Securities Exchange reported low activities in the first week of May, following a global trend that saw major stock exchanges take hit from trade tariff wars that have weakened the U.S. dollar. Data from the weekly bulletin by the Central Bank of Kenya shows that the NASI, NSE 25, and NSE 20 share price indices decreased by 0.05%, 0.45%, and 0.76%, respectively, during the week ending April 30th, 2025. Market capitalization, the total shares traded, and equity turnover decreased by about 4 basis points to 60.3 and 0.40. And the chairman of the SC Zone, that's Walid Gamal Al-Din, has commented on the signing of an agreement by the UAE's Ad Ports Group with the General Authority for the Suez Canal Economic Zone to develop and operate the 20 square kilometer KZ East port. Gamal held and revealed that the agreement is based on a 50-year USFROC that the Ad Ports Group, as an industrial developer, must prepare and the infrastructure to attract specific investments in specific sectors in the area, taking advantage of the proximity of the area under agreement. And Egypt's domestic liquidity, that climbed to about 12.566 trillion Egyptian pounds. That's about $248 billion by the end of March, up from 12.21 trillion pounds in February. And that's according to data released by the Central Bank of Egypt. The broad money supply that rose to 3.2 trillion pounds in March from 3.05 trillion pounds a month earlier, driven in parts by an increase in currency in circulation outside the banking system, which reached about 1.296 trillion Egyptian pounds compared to 1.197 trillion Egyptian pounds in February. All right, let's get a check on what's playing out in the crypto market now. Seeing well, Bitcoin did start that big recovery. It touched about $97,000, but we're seeing we've seen a drop since then to about $94,000, and we're seeing the Fear Greed index that's holding up at neutral. I know we did get to fear, at some point, but it got greedy, in the market. But now we're seeing neutral right there. That's for the Fear Greed Index, showing how investors actually feel in the market. Some investors use it as a gauge to know when to enter or leave the market. Let's look at some of the headlines in the crypto space now. We're seeing XRP whales. They've broken a record there with most of the XRP coins they're actually holding. We've seen them increase that by a significant amount, going forward. We know how the XRP army, can be. Other headlines in the market there, we're seeing also whales accumulating about 1.7 million bone. That's for the Shiba ecosystem. They accumulated that about 5 days. That's quite a big one. All right, let's go to the conversation now. It's all about crypto exchanges in Nigeria. That's licensed crypto exchanges, springing up in the country. But what does that mean for the legality of cryptocurrency? To help us break that down, we have Olaoluwa Samuel B. He's the director of Busha, and he's joining me right here in the studio. Great to have you.
Thanks. Thank you very much.
Yeah. So we're getting a lot of cryptocurrency exchanges. That's Nigerian, cryptocurrency exchanges getting licenses now. I guess that's good, for the ecosystem. But there's still that thing about crypto, in Nigeria. Take, for instance, if for traders in the P2P market, they still give instructions. Don't write anything about cryptocurrency when you're transferring money. So talk to me about the legality of cryptocurrency, in this country.
Yeah, I think it's an exciting new era for cryptocurrency and regulations in general in Nigeria. I think historically it's never really been illegal, but we've just had a very adversarial interaction with the authorities over the past few years, where, of course, we had a few run-ins with the central bank when it comes to accessing the banking system. But I think with the new administration of the president and the new SEC's leadership, they've taken a really bold and courageous move around formalizing the space. So what they've done over the past year, at least, is trying to bring in some local players who have some operational rigor and create a framework for them to fall under. Busha is one of only 2 locally licensed exchanges in Nigeria today where people can come in there and buy and sell their cryptocurrencies and engage with the crypto economy in a way that is somewhat protected by the regulations. So I think right now it's very hard to shake off the historical negativity around crypto. But I think, with the new ISA that has been signed, that's the Investments and Securities Act of 2025, the industry has been formally defined and formally legalized, where you have VASPs being under the purview of the SEC and now formally part of the capital markets operators in Nigeria. So I think over the next few years, more trust will return into the system. Right. The banking system handshake will strengthen, and
so there's still that fear, when it comes to the banking industry.
There is. I'll say there is.
And the cryptocurrency market.
Absolutely. Yes.
Right, because it's still illegal in that side.
No, actually, I think the central bank.
Because why are people still afraid?
Yeah, central bank, a year and a half ago, sent out a circular saying that the banking system can interact with licensed VASPs, but I think it takes a while, of course, for them to really establish new rules around how that engagement will really play out. So, but I think we're seeing more collaboration between the SEC and the central bank to ensure that truly legalized and licensed operators can directly interact with the banking system. So It's going to get better for sure.
No, we hope it gets better. Absolutely. But, Nigerians have been through a lot, recently. We've had the issue with CBEX, we've had MMM, and a lot of, platforms that just come up and tell you they will give you this, they promise so much, but Nigerians get burnt, in the process of that. So, talk to me about custody. Now, they say, not your coins, not your keys, not your coins. So centralized exchanges and decentralized exchanges, there's that argument there. Which one is better? So for the Nigerian context, what is better for Nigeria? Is it a centralized exchange or a decentralized exchange?
Yeah, it's an interesting question. I think they both serve their purposes. It's just like in the banking system, for example. You have, formal centralized banks and wallets where you can store your monies in those platforms. You trust them because they are regulated by trusted authorities as well. Likewise, in the crypto space, you have centralized platforms like Busha that are licensed to operate in the market. But you could also elect to hold your own assets by yourself, maintain your own wallets. In parallel with putting your own money in your own physical wallet or under your bed. Those come with their own risks, security risks, things like hacks and all of those things.
Not easy being your own
It's
bank.
not easy, exactly. It's not easy at all. There's a lot of infrastructure requirements there. On the crypto space, it takes a lot of sophistication for you to actually administer your own treasury. And that's where players like us come into play, where we serve as the initial onboarding playground for you, where you can operate safely and you can trust that we are regulated by the authorities to at least give you some recourse if things go wrong. The risk is then, volunteering the custody of your assets to various untrusted, unlicensed platforms where, of course, they could offer, a yield that is unrealistic, and those things cannot happen where you are operating in a very formal, regulated environment. So that's the risk of, dealing with unregulated platforms.
I guess at this point, if it's too good to be true, just run away.
Absolutely.
At this point, there's no need for FOMO if they're offering you something that's just out of the ordinary. At this point, I guess that's the way to escape.
Yeah,
just being scammed.
Yeah, just look at what exists in the formal system. Look at the treasury rates. Look at the stock yields, and look at what is being offered to you. No one really has a genie or a money-making well that can really just manufacture double your money every month. That doesn't exist.
That just gives you over 30%, over 50%.
Exactly. So because the crypto industry is a very fertile ground for a lot of fraudsters, a lot of illicit actors, that Nigerians tend to fall into as victims of that space. But I think there's a lot of education is coming out now from the SEC directly. You can see the leadership in the markets recently trying to communicate and meet the customers and the investors where they are. Try to explain to them that the market is not as delusional where you can expect unrealistic yield. So I think more education will come out there, and players like us, like Busha, will do a lot more just trying to educate the users around what you should expect from the space. It's not a get rich quick scheme or a market for that. So hopefully we'll do more education around that space.
Right, definitely we know that the cost of living crisis contributes to that. So people are trying to make a buck.
Desperation, absolutely.
Here, and they might get desperate and they fall for those kind of schemes. So talking about the P2P market now, with license exchanges coming up, is it over for that segment, or will the license exchanges still operate a P2P market with the way it's looking?
Yeah, I think we'll always have a parallel P2P system where individuals are still going to interact with themselves directly. What is going to happen with now that we have a formalized legal system is that it would not be the primary market, just as you have with the Forex market where the black market is really not the primary market. You have the formal central bank windows as the formal market. Likewise in crypto, the peer-to-peer liquidity would shrink quite a bit, and volumes will formalize and aggregate on venues like Busha, where you expect some controls, you expect some protections from the authorities. So you always have fringe activity in the P2P space, but unlike in the recent past, it will not be the determining the primary market for operations in the space.
Right. And talking about centralized exchanges, we've heard of some centralized exchanges that have gone under, and they've taken customer funds, with them. And we still see some that are trying to compensate, after so many years. Some take up to 5-10 years just to get your money back, at this point. So it seems like centralized exchanges are not really that, or even a licensed centralized exchange is not the silver bullet to protect investors.
There's always that risk, that particularly human risks, even in any sector really, even in banking, in commodities. There's always that risk of the actors there just being bad actors. You've seen that, and the real mitigant or the real protections around that is trusting that there's a regulator that goes through a rigorous process to ensure that you have basic protections and basic recourse to the law when those things happen. So with Busha, for example, over the past year, we've gone through very comprehensive process with the SEC around insurance, around capital requirements, around fit and proper principles, and all these things that, for example, things like offering unrealistic yield would not be possible in platforms like ours for that reason. We expect more players to come into the regulated fold over the coming months by the SEC, but what they do is at least try to minimize that risk, protect the investors. So as long as you're really operating in a regulated space, you expect that you have the basic levels of protection, and hopefully, if anything goes wrong, you have some recourse to the law.
Right. Sometimes when I look at, cryptocurrency exchanges, there's so much, going on, on those platforms. You're seeing, buys and sells, they're happening fast, and it's 24 hours, 7 days. The market does not sleep. How much of a headache is that? Because I'm just trying to imagine, because, the normal, the way things normal, markets go to sleep. Markets rest. This one doesn't.
It's a whole new world, really, and it's the world that is becoming the default for the younger people, where they expect things to be live and real time and 24/7 and on demand. I think that's what they're expecting. Our average demographic is 18 to 35-year-olds. We are almost 1 million users today, so that's where people want to be. They want people to put in some 200 Naira, 500 Naira into some instrument and expect that they're participating in the investment world. I think what is going to happen over time is that these innovations, this live and dynamic environments will translate into the traditional world as well. Our license, or what the SEC has done, is not only regulate crypto in the original sense, but also digital assets in general, where you can have tokenized versions of stocks and bonds that is also online 24/7, fractionalized as well, and things like that. So I think you're going to see the rest of the industry, traditional finance in that sense, move towards that dynamic of crypto, and you're going to expect more younger people to participate for that reason.
That'll be quite incredible.
Interesting in world,
seeing stock exchanges actually
online
trade
24/7, yeah.
24/7.
Very possible.
Quite interesting. Thank you so much, Olaoluwa Samuel.
My
He is
pleasure.
the director at Busha. Thank you for coming on.
Correct. Thank you
today.
very much. Cheers. Bye.
All right, so I guess so much to look out for this world of investments and trading, 24/7 markets that don't go to sleep. Will that happen, for traditional markets? We'll definitely find out. Still very early times, but thank you so much for watching Business Incorporated today. Feels good to be back. I've been gone a long time, and a lot has happened, since I've been gone. But thank you so much for watching. Tomorrow again, we'll bring you what's happening in most of the markets that we track. I'm Ladi Williams from the team at Channels HQ. It's bye for now.